We are midway through 2023, and we're going to give you our thoughts on the current market, give you a market update on what's happening locally and nationally. Stick around.
All right, so on a national level, we're going to start with national, then we're going to move to local, and then we're going to talk about some thoughts for the rest of the year and even into next year. So on the national level, it is still a very competitive market due to tight inventory. And that's going to be a common theme as we move into the local piece, but it's really interesting. So the median home price in June of this year nationally was $426,000. If you look at it at its peak, which was last May, it was $432,000. So there's only been, what is that? A tiny drop, a $6,000, $6,000 drop from peak of last year to where we are this year. So that is important because I think there was a lot of talk about the potential of a housing market crash or the potential of just a really tough market. And what low inventory has done is really leveled the market. So the peak of last year is not much different than where we are this year. And when you look at it from an inventory standpoint, new listings are down 30% this year compared to where they were last year. And that's really the driving force of why the market's competitive, why prices have hung steady to where they are. And I think that's a really fascinating thing.
Definitely. So what is kind of driving this lack of inventory? As most people know, interest rates started to really take a rise up last fall, and they're continuing to go up, but on average right now when we're filming this, by the time you watch it, it could be different, but they're hovering around 7%, which is pretty high compared to where they were 2 years ago, even just a year ago. So, right now, about 85% of people have an interest rate below 5%, which is crazy. And then 62% of people have one below 4%. So it's pretty hard to convince somebody with an interest rate that is that low to go and move to a house that's similarly priced or more expensive, and then also hold on to that higher interest rate. Yeah, exactly. That the made up family in this scenario that wants to move to another school district or wants to move into a larger house or maybe downsize their house, they're sitting on a 4% interest rate. They're going to stay on that 4% interest rate instead of incurring a 7% interest rate with the move. And that's what's happening to the inventory. That lack of inventory met with still existing buyer demand has really leveled out the market over the last year. Definitely. All right, so now switching gears to the local market. So in June of 2022, the median home price in the area was right around $421,000. Now this is the entire triangle, so we're pulling in a lot of different areas here, a lot of the outskirt areas that are bringing some of those numbers down. So if you're looking at like a place like Cary or a place like Apex, obviously those numbers are significantly higher. So just want to make that clear. But $421,000 in June of 2022. This year in June, we were around $410,000. So it's about $11,000 difference between the peak of last year and this year. So a relatively flat market is what we're experiencing, kind of like the national market. And once again, this is driven in our area by the low inventory. So on the national side, you're looking at a 30% decrease year over year for new listings. In our area, it's a 25% decrease. So kind of following along with similar trends of what we're seeing nationally is happening here as well. Demand is just still really high for people moving to this area. There's so much here that's bringing people in, like especially with RTP being here, different seasons and weather and just trees and things that people maybe don't have where they live and they want to come. You'd be surprised how many people want to move here because they're like, there's trees. It is true. Yeah, I mean, we got spoiled, I guess, because we're used to it, but a lot of people don't have it. So so a lot of people are still moving into the area, continuing to drive that demand is still up. And what we're kind of seeing on the ground is, some houses, the ones that are like move-in ready and beautiful, they're still going in multiple offer situations and bidding wars, selling above the asking price, but maybe the more fixer-upper homes are kind of more boring or need updating, those are a little less competitive right now. So it's a tale of two markets right now. You have part of the market that's hyper competitive. It's the house that looks good online, it's the house that shows really well, it's the house that needs no updates, and then you have the other homes that need a little bit of love. Those tend to be the ones that are sitting for a little longer.
All right, so what does the rest of the year look like, and even projections into next year? So I think the rest of this year is probably going to look relatively similar to what we've experienced. Probably a tale of two markets, competitive on one side, have other homes that are sitting on the market a little longer. I think that's going to continue because I don't think we're going to see a drastic decrease in interest rates over the next several months.
Right.
However, what is interesting is when you start looking into next year and even further than that into 2025. So if you're looking at a lot of the data collectors, so to speak, so the National Association of Realtors, the Mortgage Bankers Association, Fannie Mae, if you look at their projections, and there should be a graph on the screen for this. If you're looking into next year, Q2, they're projecting, all three of those are projecting interest rates to be back into the fives. That is significant. So what?
Huge news.
Yeah, exactly. So that made-up family we talked about earlier that wants a different school district, but they don't want to move off of their 4% interest rate, if they can get that rate in the mid-fives, they're going to move. So it's going to loosen up some inventory, but it's also going to bring back that increased buyer demand. So I think you might have a market that could potentially return to what we've experienced in years past. Maybe not as hot, hopefully not as hot, but it could be.
Yeah.
And that competition could return once interest rates come back down into those low numbers.
Right. So yeah, I mean, with the rates going down, it's really exciting, you know, pre-pandemic and then during the pandemic, I feel like people were getting like 2%, 3%.
Yeah. We won't see that again.
I don't know if we would ever see that again.
Yeah.
Who knows? But the good news is coming back into the 4s and 5s, I think is going to give people a lot more room in their budget to be able to make the move that they need to make, keep their monthly payment lower, and just be better off for everybody. Hopefully the people that are staying in a house they might not really want to stay in, but they don't feel like they can afford the interest rate hike to move. Hopefully it'll clear up some inventory for folks like that.
Yeah, and it's a tough decision to make for buyers, and I mean, we can't make that decision for people, but like, you know, you've got to balance out what does it look like to buy a house now with potential higher interest rate? What does it look like to maybe risk it, wait for a lower interest rate, maybe face a little more competition? That's a personal decision you've got to decide, but I think those are probably the two realities right now.
Right.
You buy now with a higher interest rate, you wait for a lower interest rate, and you just deal with more buyer competition. And so I don't know if there's a right or a wrong. Each person's situation is different, but I think those are probably the two scenarios that'll play out.
Right. The hard part is, you know, you spend more with the interest rate on your monthly payment, but if you come in later and get the lower interest rate, your payment's lower, but if you end up getting into a bidding war, and it was not uncommon in like the Raleigh-Durham area back in 2021, early 2022, to see homes go $50,000, $75,000, $100,000 over the asking price in these bidding wars. You have to ask yourself, am I really saving money to have a smaller interest rate, you know? So it's
what
tricky.
I would say to that, and I'm just tacking onto it, is sometimes you hear the phrase, date the rate, marry the house. I think that's horrific advice. I would never give that to anyone, because you're not guaranteed. All these projections are, I mean, they're made with an enormous amount of data. They're just not pulling numbers out of their hat. But at the end of the day, they're projections. And so you buy a house that you can afford with the interest rate of today, not with the expectation that it will inevitably lower in the future, because maybe it doesn't. And so you've got to keep that in mind. I think that's terrible advice. And so hopefully none of y'all heard any of that in what we were saying. But I think that's just, there's a tough decision to be made as a buyer. But I think those are probably the two scenarios. So, but I am Zach. This is my beautiful wife, Cindy. We are a couple real estate agents in the area. So if you're looking to buy or sell, we'd love to be your real estate resource of choice. You can find us at, our contact information is below, and you can also find us on Instagram. I've sweat like running down my face.
So much sweat, so hot outside. You can find us on Instagram at The Honeycut Realtors. We'd love to have you follow along with us there.
But anyway, thanks for tuning in. We will see y'all next time.
Gotta get some AC.
Yep.